Let's take a look at some information and charts on Yearn.finance, or Wi-Fi for Brave New Coin. So at its heart, Wi-Fi is lending and aggregation, yield generation, aggregation, and insurance. Although I'm not too familiar with their insurance aspect. They do have many products that they are continuing to release. Essentially how this works is you deposit money into a smart contract, and there is automated yield generation and rebalancing, socializing gas costs, which was a bigger deal when gas was infinity, and automatically shifting capital as opportunities arise. So as we have more and more yield generating avenues, it's important that services like this exist where they just automate everything for you, make it easy. And they specify further here, Yearn was first a lending aggregator where funds were shifting between protocols automatically depending on interest rates. And if we look at where those rates were and where they are now, they're down considerably over the past 6 months, 6.5 months, down from their January all-time highs, basically. So it'll be interesting to see if rates pick up. If they don't, does the appetite to deposit into Yearn remain the same or decline? You know, what's the relationship there? This is just USDC, but there are other markets as well, obviously. DAI borrowing is way down. ETH borrowing is pretty variable in general, along with BTC. But overall, most of the stuff people are lending, which is stablecoins or semi-stable coins, DAI, 52% of DAI is comprised of stablecoins. As the stuff being lent out increases in supply and decreases in demand, but the rates for borrowing should continue to decline, unless there's a surprise bull market here coming. The website itself is easy to connect with, easy to use. This is exactly the type of UI that we need in crypto, just super simple and stupid proof. You can deposit assets wherever you want. It's easy to withdraw. Pretty obvious what you're doing when you're doing it. And you can see all the information that's important, right? It's exactly what you want. If we look at the TVL relative to everything else, Yearn's number 7 in the Ethereum ecosystem for TVL, currently at 4.8 billion. TVLs across the board have been slowly picking up after that May 18th liquidation spike. Things like Curve and Wi-Fi will probably hold their TVL more so because they're mostly stablecoins, whereas Aave's TVL, Maker, some of these others, where they're more volatile asset TVL than stablecoin TVL. Obviously that TVL is subject to volatility in general, and not necessarily belief in the protocol itself or incentive based. So that's always important to keep in mind. If we look at the Yearn TVL specifically, it's at 4.38 billion across version 1, version 2, and the other stuff that's available there. This is Yearn.science where you can see the TVL. So clearly there's a demand for this stuff still, because TVL is growing. To just park whatever you want, park it into Yearn, leave it, set it, forget it, collect rewards, let Yearn do its thing without worrying about where do I put XYZ tomorrow because the incentives aren't there anymore, right? Yearn just does that for you. Now, does it need a token? I don't think so. I think the token is what Andre says it is and is worthless at the end of the day, but people are going to trade whatever they want. So there's a governance side of this, which of course there is because it's got a token. So they need some sort of use case, but I don't think any of these governance tokens will hold their value over time in a bear market. I'm looking at Yearn unique users weekly. Another way to look at some of the on-chain metrics I'm about to show. Obviously, a ton of people in the beginning when Yearn was hot and new on the market, and still seeing a relatively small but continuous uptick in weekly users, unique weekly users. So in general, there's still a demand for this sort of thing, and it's obvious in TVL as well. TVL, if TVL was going down or declining, it's even recovered completely since the May 18th liquidation spike down and goes to higher highs, right? So if people didn't like the product or didn't care about it, this weekly user count would be going to 0, but it's not. Transaction counts, though, for the token, definitely going to 0, continue to decline. Fewer transactions, definitely not bullish for the token. Average transaction values falling off considerably as well. So in a vacuum, when I see this, can't be bullish on the token. Active addresses also continue to decline since September. Can't be bullish. There just isn't a lot of Wi-Fi circulating, let alone people moving it around for any reason. My guess is there's a lot of centralization in who holds the token if you were to look at the Wi-Fi rich list, where it sits and what it's doing in general. NVT has fallen from all-time highs to sort of a mid-range high. So the token, NVT is telling you, what active addresses and transactions are telling you, in that we're still relatively overbought for the current price if you look at market cap versus on-chain activity. If we look at Google Trends for yield farming, which could be a real-world term as well, but if we zoom way out, past 5 years worldwide, pretty clear that the DeFi spike in mid-2020 is what this was, as well as more recently, and it's continuing to hold its highs. So I don't think yield farming is going anywhere. I don't think DeFi is going anywhere, but the token itself is in big trouble, and I'll show that in technicals in a second. And this is another mirror of TVLs, really, more than anything, more than Wi-Fi's on-chain stats, which look abysmal over the past few months. Here's some technicals for the token. 15 to 200 will probably cross bearish soon. It's got a descending triangle here. Also holds a bearish bias sitting above all of this volume support. And if this breaks, I like 50% lower, which is 15K, pretty easily. And that's not just Wi-Fi, that's everything in DeFi across the board is set up for a 50% decline. Even BTC and ETH are set up for that. So it's leaning bearish, it has a bearish bias. Previously it had this head and shoulders that didn't break down, so maybe it's safe here. But if all of this volume gets underwater as price goes lower and lower and lower, I think this could easily see 15, even retest 6 to 8. It could get really ugly. RSI, interestingly enough, hasn't been below 35 since November 2020. So it's kind of due for some sort of spike on RSI lower. I think that would be a decent buy opportunity in a vacuum, not investment advice. But again, technicals like support much lower than it is here. And it's going to have some bearish trend metrics on its side to get there as well pretty soon. It's already below the cloud. And much like everything, it does have a TKC clamp here. So if this doesn't break up, if this does mean revert, which it shouldn't, but if it does, then you're looking at 60K basically, which is almost a 2x from here. So it's kind of a coin flip, but it does have a bearish bias across the board. Wi-Fi BTC looks like it has an M double top, inverted Adam and Eve below the 200-day moving average. It did break up from its prior sort of bearish bias consolidation situation. It did have a bull div on RSI here, which it doesn't have here just yet, but that's also something to watch for on any continuous lower lows. If this starts cruising below 32, below 23, even below 15, you'll probably start to see a bull div, which is more evidence that it's okay to start jumping back into this kind of thing in a vacuum. Not that I would ever want to touch this, because I think fundamentally it's worthless, but that's just me. Another problem for Wi-Fi BTC is that there's a ton of volume at the current support level, basically where it sits. So if this breaks, I like 06, 05, any lower lows, definitely. This doesn't have a bullish bias. It looks ready for lows here if something doesn't happen soon. And Wi-Fi ETH looks like it's in a mega falling wedge since trading began, basically. But trend metrics still lean bearish, below the 200-day moving average, below the cloud forever. It's never been above the daily cloud. So it's never outperformed ETH in a big way over time. I don't know if that ever changes, just because it's such a silly idea for a token for many reasons. It's still worth 15 times ETH, which is also silly and problematic for many people. Now you can buy a fraction of a Wi-Fi. The Wi-Fi people will make sure you know about that. So this is a bullish reversal pattern. If it doesn't puke out the bottom, which I think it will, but if it doesn't, maybe into 2022, this starts outperforming ETH. I don't know why that would be the case, but maybe that happens. So I love the protocol. I like the idea. It is automated yield generation. Set it and forget it. My favorite type of strategy. The token is pointless and meaningless to me. Maybe I can get educated on that further and change my mind one day, but right now I just don't see a reason for it to exist. Technicals, though, in a vacuum, look extremely bearish, ready for 50% or more decline, along with everything else. Lastly, I'll just mention the ETH-BTC fund for Techemy Capital, as well as the DeFi portfolio that I trade on Enzyme.finance, non-custodial portfolio management tools. You can see AUM, allocation, performance, all the trades, all the deposits, everything. It's all here, all done through DEXs. It'll be interesting if I can ever access the Wi-Fi stuff through Enzyme. I currently can access a few things like Aave, so most of the time any cash is sitting in Aave. We've never bought Wi-Fi just because I've never believed it's a thing in the long term for the DeFi portfolio, but that could change one day. I just don't see that happening anytime soon. That's all I have for this one. Let me know your thoughts on Wi-Fi in the comments below. Like, dislike, share, subscribe, and happy trading.